This week, one of Australia's great entrepreneurs, Trevor St Baker, was named the National Champion of Entrepreneurship by accounting firm EY. St Baker, as we've documented here before, has a long history in power generation in Australia. He famously acquired the Vales Point Power Station for just $1 million, and it was several years later valued at more than $200 million. But St Baker is also one of Australia's biggest private investors in renewable energy, notably in the electric vehicle charging company Tritium, which just 2 weeks ago posted record sales and a record backlog of orders. Now he's creating a new fund inside the St Baker Energy Innovation Fund, led by the former BHP executive Rodger Whitby. I caught up with them both earlier this week. Trying to raise funds for new ventures to try and discover the next Tritium or the next Novonix that you've got investments in. Is that as easily said as done?
It's hard, and you need your first million. And by the way, we started forming ERM Power, which built up, it was one of the largest gas-fired power generation builders in the 2000s across 3 states of Australia, gas-fired power stations. And at the end of the 2000s, we went retail and became the 3rd largest retailer nationally of electricity. And in 2019, we sold that to Shell Energy, and that same culture that we built there has lasted today. And we've grown that business from the ground floor. They start with $5 and $7 million bites, building from in backyards to start a business. You get R&D grants, and there's quite a lot of support for building businesses from nothing to a proven concept and a translation to a prototype. But to take it from there to anything like commerciality takes $50 and $100 million bites. And the family offices are more in the $5 to $20 million bites, so you've got to go to superannuation companies. And nearly all of Australia's investable funds in superannuation companies are in funds that are driven by having no defined benefits superannuation schemes. All they do is invest in ASX 300 companies. I mean, they're not starting new businesses. They're just trading on the stock exchange day to day to keep their rates up, or on bonds or around. So there's a great dearth of family offices that can grow big enough to invest a 20% share for $50 million in a company to take it to commerciality. And then, like Tritium, they start to want $100 million to get to scalable and to get to manufacturing and to get to the working capital you need to expand like Tritium is. And even listed now today, Tritium needs working capital to scale its global charger production from 4,000 charges a year to 34,000 charges a year by 2025.
You need big capital, there's no doubt. Rodger, can I bring you in on this conversation? Because you are going to be the custodian of that money when raised. You've got to then come up with the ideas, either here in Australia or overseas. Is it more likely you'll find the ideas for this capital in Australia, or will you find them more likely overseas?
Look, I think we'll find it in both, actually. Here in Australia, we have the great advantage of the St Baker reputation in this space. So we have great deal flow here in Australia and some really smart minds putting together these, new start companies.
And is there enough coming out of the universities, enough innovation in Australia to really, if you like, take up the appetite? Because often they're said to be capital starved. Yeah. The reality is there's a pot of capital here. Yeah. So is there sufficient ideas in Australia coming out?
There are sufficient ideas, and it's not all the universities, by the way. One of the things that we're looking for is, some experience in founding teams, and that's not always what comes out of a university. So there are plenty of industry, well-hardened industry people who come up with good ideas and bring them to start-up stage.
So